Good morning, everybody. It's Election Day for the United States for the House and Senate. The Republicans are forecast to take the Senate back from the Democrats, and that normally would lead to a better environment for businesses and economic growth, but I'm not sure that we can say that with this group in charge of the Republican Party. My guess is it will be status quo, that the budget desired by Harry Reid and Obama will be passed. They'll have all the money. They'll get a continuing resolution. The Republicans will say it's to clear the decks, so we can start next year with a clean slate. I imagine that the Democrats will push through every committee chairman, every judge that they want. And again, install, a permanent bias into the judiciary, as many places as they can do it. So I'm guessing that normally you'd expect if the Republicans were to take the House and the Senate that you would get more control over spending, that you would get policies that would further economic growth, but my guess is that we probably won't. So I kind of see the status quo coming out of this. So the Republican Party, the irony is, and if you read history, the Democrats who couch themselves in terms of the party of peace, start wars, basically through appeasement, and the Republicans who couch themselves in terms of fiscal responsibility often lead to the largest budget deficits going. So again, like in everything else, it's not what they say, it's what they do. So I see, even with a Republican win right now, slow economic growth down the road, never-ending budget deficits, and policies that will pretty much stay on track with the bureaucracies doing what they have been doing. But at least we have a shot at slowing things down, and so hope does spring eternal. I hope I'm wrong when we get it. Normally, the markets would rally, both equities and financials, into the situation. I think we do have a shot at rallying today. I see best resistance in this 2024 area, and again, we're just like we were yesterday, maybe 18. You remember yesterday we started off saying that the sell came at 17, but it might take 15s to get in. And the high in the day session was 15.5. So I think we're in that same situation. So the first sell will be 19 to 23. May have to lower it, but the market is pointed up. We do have a double distribution higher than 27 to 31 will be sell 2. On the buy side, we're at 14.5. The overnight session low is 7, so we'll start out at 5 to 9. But again, we've got volume at 11. The last rotate down stopped at 10.5. We may have to pay up, but we'll get started at 9 to 11, and then 1 to 5. Excuse me, 5 to 9, and then 29 to 1. For buy 2. Today's news, factory orders is called -0.7. Trade deficit -40.2. Biggest news out overnight is that Saudi Arabia cut the price of their crude oil to North America. They left it the same for Asia and other parts of the world. They're defending market share. When Saudi Arabia defends market share, the bottom falls out of the market. The reason is probably threefold: Iran, Russia, and shale oil production, or fracking, the frackers as they call them right now. I imagine that the Saudi Arabia's view the frackers in a little bit different terms. Probably threefold for Saudi Arabia. The quickest way that they say that when oil goes below 130, it really pressures Iran, when it goes below 100, it really pressures Russia. And supposedly $75 is the magic number for fracking in the United States. We'll just have to see. But what they have done is that they have cut prices to defend market share, and that always leads to lower prices. And that's good economic news for the United States in the sense that we'll be spending less money on driving and petroleum products. It's bad news for the United States as far as economic growth, because the growth in the United States really over the last 4 years has come from fracking, from the energy sector of the United States. So it's a mixed blessing. At the pump, we'll enjoy it, but we will not get the growth that we've had. As with most decisions in life, there is some good with the bad. It's not always just perfect. One of the things that when you look at history and you look at parties that are in power, crony capitalism, those that are, I mean, you've seen it through monarchies, you see it all along. The banks that are close to monarchies that finance wars, the lawyers, those that write laws, those that interpret them that are close to the seat of government prosper. And we have the same thing in the United States. And those that are in power right now really like that. And they've got the cash to at least delay the inevitable when they no longer are in power, and they do. It is much easier to get a law passed in Washington, D.C. than it is to go out on your own and do something by yourself, take on the marketplace. So what it does is it slows down innovation. It slows down economic growth. Those that are at the top of the industrial pyramids, they're usually cash cows. They've got a lot of cash. They buy up their competitors. They buy up their competitors through getting government to pass legislation they like by financing financial campaigns in parties. And that's where we find ourselves right now. Okay, looking at the bond, it is higher. It may take 19s to get in, but we're going to start out trying to sell 23s to 27 and 31s to 03s. We'll put a question mark at 19. On the buy side, we broke it out at 12. We're currently at 17. We've got volume at 9. So I'm going to put 5 to 9 down here to pick up this area. But again, it may take a 13 to get in. We'll just have to see what the initial run is. And then 29 to 01 for buy 2. Gold has recovered from last night's lows. We're able to break it. Pretty good buying. We had 60.62 as our buy last night. We didn't touch it. 63 was the low, so we've had a couple of higher lows right here. We extended. 75 is one of those very round numbers, and it was sold. We're currently at 69, so this 73 to 75 is sell 1. Got a 2-letter ledge at 76, and then halfway into this area over here, 79 to 81, sell 2. Now we may be in the same situation we were yesterday. It might be 70 because the price of crude oil going down is not good for the price of gold. It's deflationary. Less inflation, less of a reason to own gold. Interesting article out on where all the gold went when the world central banks started selling their gold during the bear market, and China and India are the two names that pop up the most frequently in that. 61 to 63, buy 1. and then 55, 57 for buy 2. So what is interesting is that you have central banks selling to drive the price of physical gold lower, and we get arrested. We'd be thrown in jail for doing that, for market manipulation. But so much of what goes on these days is by governments is outside the law, and probably always has been when you get right down to it. Okay, looking at the euro was up overnight a little bit. The yen continues to get slammed off of their, I don't even know if you call it Keynesian economics anymore. It's, to me, it looks like, I mean, we've all been in that situation where I won't be able to trade futures again if this trade doesn't come back. Screw it, I'm out when my accounts run to zero. I'm said and done. And you know what's always interesting is that the politicians never think they will be touched by this. They think that they'll be on a military base protected if the riots start. They'll be on a military base at least where they can eat meals ready to eat. Their families will be protected no matter what policies they put in. They will not go to the guillotine like the French monarchy did back when that happened. But so that's why they get up there. To me, that's the only explanation for why they would do stuff that is harmful. But they do it on a regular basis. So get it while the getting's good, and I'll worry about tomorrow. Okay, this 25, 40 to 50 area, we love selling the 50 area. When we left the market yesterday, we said 25, 25, 10, and 25, 25 to 35. You can see the top end of our number 2 band held. So right now we got a seller 30 to 40. That's sell 1. We'll make 50 to 60 stops above 50 for sell 2. On the buy side, the last rotation down stopped at 125.04. So we'll make 125 even plus or minus 5. Buy 1. And then we'll make 75. And we'll make, 75 to 85 for buy 2. We're going to pick up this area right here, that value area low. The euro can rally. Just not for long. Okay, crude. Crude just got hammered again last night off the Saudi Arabian announcement. Like we said the last couple of days, in the last week, the market expects $5. That's where it goes. And because it's futures, what we see in the market today historically has represented what where the market thought prices would be 6 months from now. So we had the 78 up here. That was the spill that came out all the way down to 75, 75 to 76. So I think we can go a little lower today. It'll be interesting to see if we break. So we'll put buy 1 at 75.50 to 75, and 75, 7. And I would have a resting limit order out there to buy against 75. It's just a round number, and we've come so far so fast to 5 1/4. If you don't want to have a resting order out there, getting stops below 75, we said no reason not to go to 75 quickly. Okay, 76.84 is a high. We have the spill from 77.14. We're currently at 33. So 76.75, we're going to have extra volatility today. Sell 1. And then if we get through 77, given as fast as this market has moved, we could have some extra volatility. So 77.50 to 75. If you're going to be aggressive, do it on the sell side, not the buy side. But This is tied to a piece of news, and it's a piece of news that could break the market. Saudi Arabia says the price of oil is whatever they say it is, and the market goes there. Like I said, Saudi Arabia probably has 2 or 3 reasons to be doing this. Iran, Russia, and the frackers in the United States. Okay, my guess is Jeff Dougherty pointed out the other day on the Reagan election that market rallied into the close that Tuesday and through noon on that Wednesday, and then it sold. And we may be in the same situation here. If the Republicans do what they would normally do, money would become a little tighter. Their influence on, I mean, the Fed is influenced by who's ever in power, mainly by the White House. But they do have to pay attention to Congress. So the Republicans tend to be better for the financials than they do for equities. So, what's the policy going to be? My guess is there's not going to be any changes. So the market can still trade higher, but based on current policy and current easy money, but it is pointed lower right now, so we're going to play for that. We are at support in this 2005, but maybe we can go a little lower, so we'll put buy one 2000, 2002. Put a question mark at 5. It is a round number. There is some support at 4, but 4 to 5 could hold, and then I do like the 95, 97. But 2000 is a round number, and normally you'd expect this to hold. We've got a B, so we are pointed lower. We'll see what happens. The first sell will be 9 to 11, fairly aggressive, and then 14 to 16. Today's news, the elections, your guess is as good as mine on how it'll hold up and how the market will react, but the Republicans are expected to take the Senate. Factory orders minus 0.7. That's bearish news. That normally would take the stock market lower. Trade balance at minus 40.2. It is improving because of the price of oil, but no one ever pays any attention to it. So number one focus will be factory orders. After that, it'll be to the elections. They can make pretty informed guesses on which way it's going to go. Better than the exit polls, which are gamed and are played. Most people think, again, that if the Democrats do manage to hold on, it'll be based on the amount of fraud that is able to be gotten away with. So, again, that's where we have it. So let's look for a trading range with a lower bias off that. We want to get long in this 2000 area and see if we can trade back up to 2010. I'll be with you as soon as I can. It'll take about 20 minutes to get everything posted. I'm going to get busy on that. In the meantime, good trading. Be with you as soon as I can.